Hello, everyone. Had some pretty whippy action after the Fed. I just want to come back to how the week started. Hi, Brock, Kevin, Shahab, Arena, how are you? Gemma, we always start at the top of the hour. Hi, Amira. Thanks for that photo of Jerusalem. Rahul, Sunil, from all the way from India. And you could hear us and see us all the way from there, huh? Okay. So came into Monday talking about people front running the Fed, and that the most obvious thing to do in front of the Fed was to short the dollar, buy the metals, and be long risk. And for the most part, what was most obvious turned out to be obviously wrong, especially on the S&Ps. A pretty negative day yesterday, and some pretty good follow through. And I talked about the off number being 3420. We got through it by 9 handles. You got an orange haze from the fires in California? Well, I heard they can really see it from the space station. Anyway, we had a pretty big failure in the S&Ps and big follow through today. So we're hanging on to these lows barely. I still think that the call was that there was one more low coming, especially in NASDAQ. And NASDAQ almost achieved that too. So we'll see if the plunge protection team can come in and save the market in the next couple days. Also, people that were, betting on the long side of metals didn't really do that well either. In fact, I showed this rising wedge in silver and we broke down. In fact, turnaround Tuesday short was here, right? And we tried to recover and couldn't even do it. So silver still the weak sister. Moving averages are containing bounces, at least so far. Yeah, Goldman Sachs, well, we don't know yet. Here's the gold, but really on the week, we're about unchanged. With 1 day left, it looks like a 2-week reversal is coming there as well. So, they went looking for stops a few times here and here, but actually silver looks weaker. If you just look at this, yeah, oil's at 40. Now we'll see. Thank you, Sensi. When you look at the gold here, we made and took out this high here, and silver did not, right? We took out this high early in the week, and then we couldn't even take out this high after the Fed. We couldn't take out this high, and look at gold made a couple of successive new highs here and here. So the structure was showing that silver was weaker. Also, the gold silver ratio was due for some type of bear market rally, and think we had it. I mean, it's nothing to write home about, but it's not making new lows. It's kind of moving sideways here. Anyone's guess which way it's going to come out. Maybe there's one more break, but I was thinking that we could come back towards 83, maybe even 94, which means that silver will be the weak sister. Okay. Getting to currencies here, people like Blake Morrow. Let's take a quick look here. Has been short the yen from the breakdown. So there it is. Up 1% on that trade from the 105.70 level. Target 103.50. That's the measured move. Nice pip there, Blake. And something that might be turning, the correction might be terminating, is where Euro Pound held. Came back to the 50% retrace and leading the way. So really now, if this is a turn, now cable becomes your preferred short, and it's on the verge of a breakdown. I think we're going to new lows in cable. Euro held a very important level right here. Looks like, you know, it's a little stop hunt. You get closes under 1750 and you just take the high at 120, and that's going to take you down towards 115. Down here, look at the moving average on the daily, the 50-day. Went right to the 50-day. So underneath it, yeah, I think that's a possibility, Sinatra. Underneath today's lows, it's going to look pretty ugly. You know, there is some support here at, there's 117, but this 117.50 level is important. It gives way, there's problems, and there's a possibility that it doesn't, because look at what the Dixie did. You know, couldn't quite make a new high, and it's pulled back, but you know, I still favor the long side of the dollar. Fabian Nachi is a very good singer, Fabian. Okay, so how to use them? You just plug them in and watch how markets react to them like a pinball machine. Okay, and I think that's about all that I was going to cover. The Aussie short from here worked pretty good this week. Aussie was my, you know, preferred short. Nice bounce back in Aussie too, but bouncing right back to the breakdown. So we've had some wedge breakdowns. Aussie's closer to negating it than silver is. Silver would have to get back above, you know, 27.20, so that's about 40 cents. So between the dollars wedge and what we have going on here in silver, silver looks weaker to me. You got long Kiwi? Yes, it is. I've been looking at Aussie Kiwi. I'll take a look. I don't think it's bottomed yet. So, you know, you want it to bottom for Kiwi to be the preferred short, but I understand. I even took a shot last night up here, covered down here. So I was thinking when I was looking at this that there might be one more high, but I like the trade as long as you know where you're wrong. And I'd like to, before I pass it over to Blake, remind everybody that we have our discounted promo going, especially you, everyone there from investing.com. So here's the offer, 2 for 1 on the monthly. Nice deals to become part of our community. And instead of thinking about paying for a service, you could look at it as you're investing in your trading career. That's the way I think you should look at it. Because you know you're going to pay for education and guidance, or you're going to pay the market. Usually can't get away with paying one or the other. So, you know, probably better off spending $100 a month or so to be guided in the markets. Although we're not trading messiahs, at least we'll keep you away from making the big mistake that turns your account into a blowout. So consider this. Also, we have our big event coming. I'm not sure if it's on this page. These are just our webinars here. So I'll have Blake show you. The lineup is phenomenal that we have and that's going to be next weekend. So if you want to be able to be there live, you need to register soon. Even Zoom, they all have different packages for how many attendees you can have. So don't take the risk and procrastinate, get signed up today. All right. And I'll bring Blake in, see what he thinks about the markets post-Fed here. So I know that, you're up real late the night before, Blake, and, I don't know what kind of day you had being sleep deprived yesterday, but I know you, so I know you're all caught up and in gear now. So I'm wondering what you're
I slept
thinking
like
here.
a baby last night. Good morning.
Good morning, buddy.
Yeah, it was, you can you imagine? I mean, you can, because we're on the same sleep schedule, basically. I stayed up till by the time I went to bed was 1 o'clock in the morning. And, if I'm trying to do that without a beer in my hand, it's very difficult.
Yeah.
So-
sometimes when you stay up later than when you regularly go to bed, it's hard to get to sleep because it's like you're throwing your biorhythm off, and
yeah, I was
had a hard
little,
time getting to sleep that night.
Yeah, I was a little wound up, but I was
Yeah.
actually so tired. It took a few minutes. But yeah, if you guys didn't know, I was actually doing an event with some of the Pepperstone clients, because for those of you that are not aware, we've developed a relationship with Pepperstone Securities, and a lot of traders in Asia and Australia don't know who we are. It's on the other side of the world. Our focus is predominantly in Europe and in the US. So we had it was actually Chris Weston and myself just doing like a special. If you're a premium Pepperstone client, it was kind of an introduction to who we were. But more importantly, it was just kind of an update ahead of the FOMC, and he talked about some things. And the one thing that I left him with is like, if I can leave you just with one idea, is short the dollar yen. So it was, and obviously the dollar yen is continued to break lower. Now, if you're a ForexAnalytix subscriber, you already knew that, because we've been short it for the last few days. But the dollar yen. Call. Thank you. Hey, in this market, I'm going to take the win, because it has been a very challenging market. But what we're seeing now is we're starting to see some volatility seep into the market, and this is good for us as traders. I'm going to highlight the fact with what happened yesterday, and I talked about this yesterday during the daily roundup regarding the Fed. The Fed, people got, excuse me, let me drink my excuse me 1 second. I just need a cough. Hold on. And grab a sip of my coffee. Okay. The Fed got, or the market got what they expected. The Fed basically said, we're going to keep rates lower forever. I mean, rates aren't going up ever. And ever in our lifetime, they're never going to go higher. I'm just kidding. But they basically they gave everything that the market wanted to hear. I mean, rates aren't going to go higher until at least 2023, because that is when they see inflation expectations, possibly PCE reaching 2%. And Steve Leisman did a really great job yesterday from CNBC. He was really quizzing the Fed, and he's like, look, none of your plots even show a pop above 2% between now and 2023. So how do you even expect to make it there? So, I mean, it was just accentuating the fact that the Fed's going to keep rates lower for longer. But that's what the market was expecting. So the market was expecting a dovish Fed. They were hoping that the Fed might do some other type of creative action, which they didn't. And so what we're getting today, and what we got a little bit yesterday, is we got a little bit of selling in equities. Now, I think as we have to be prepared, as we've been talking about, a move below 3,300 in the S&P, could quite possibly break into, I've been talking about this is a big trapdoor trade. A break below 3,300 can move us towards 30, the 200-day moving average. It looks like, by the way, you guys might have a guest today. It looks like Grega wants to join today, so I'm going to hurry up and get this analysis out of the way for our majors, because I love it when Grega comes in. He gives us a different perspective of the market that maybe we weren't looking at. So, but I'm gonna put this back on the 3,300, 34 and a quarter for the S&P is our range. Now, I'm just going to finish off with the, talking about the dollar. The dollar is starting to get a little bit of a lift because of the risk off that we're seeing in the market. Now we're starting to see that the old correlation come into play, which is dollar strength, yen strength. Now, what's really interesting about that, and I'm gonna come back to the yen because I think the yen's an important talking point because I have yen exposure right now, and I'm gonna tell you the reasons why I've got that exposure. All right, so. But let me finish off with the euro. So, and some of these other dollar pairs before I get into the yen, because the yen is a more complicated conversation. But as you can see, the euro is basically holding that break, that multi-year trend line. And here, I know this chart has a lot of drawings on it. So let me I'm going to go to one that doesn't. Okay, so this is the euro, right? That's a weekly chart. So let's take this high right here back in 2008. Now see this high, right? The spike high in 2014. Okay. Now notice where we're at. And let me reset that. You see it? Okay. And I know you could you could say, but Blake, didn't we break that trend line way back over here? But you're probably drawing it from the highs in 2014 to right here, which I'm actually focused on both, because what I am looking for, just so you guys know, is I'm looking for a dip in the euro to buy. So break below, 117 takes us to 115. A lot of people will be looking at a head and shoulder pattern. They're going to target, much lower levels like 115, and I'm gonna actually try to buy before then, right? So, but actually, it all depends on risk appetite as well. All right, now going back to the euro, this is basically what I'm seeing here, but I'm going to go back to the one that I've been drawing on. As you can see, we held that support, which means that 117.30 is going to be 117. Well, actually 117.40. But you know what? I need to write down this because this is going to be really important. Hold on, really quick. Oh, no comments, huh? I remember a trader a couple of days ago when we were trading at 119 who made some comments. Oh, Blake, the euro's never going to go back to 116. It's never going to break down through these supports. Okay.
Never say never in this business. Everything can happen.
I love it. I love it when when people look. When I'm wrong, I'm wrong, and usually I'm trading it too. And believe me, I'm wrong. More than I really want to be, but I love that when they're wrong, they just radio silence. Radio. Oh, you can't admit being wrong. Yeah, you'll never make it as a trader. Never, ever. All right, so let's. Like I said, I'm wrong way more than I want to be, but that's part of trading. Is you're going to be wrong. It's just, managing your risk. And that's it. It's,
You'll rarely hear those words typed in text on Twitter.
oh no,
I was wrong and I don't know.
yeah. I trade big size too. It's not like I, fiddle faddle around with 100,000 currency here and there. I trade some pretty large size. So when I'm wrong, it hurts. And, when I'm right, I do well, but but if I'm wrong and you're talking to somebody like me that, I come from a retail background, retail meaning trading for myself. So when, I started trading for a firm a couple of years ago, it's, it's been a learning process for me, because it's all that P&L counts. It's not like it's the firm's money, but it's the P&L is mine. So if I lose 20 grand, that's 20 grand that I'm, like, oh, well, it looks like I'm not going on a vacation. Or, if I make 20 grand, it's like, ooh, we're going on a nice vacation, so the P&L, everything from my P&L really matters. But it's much more exaggerated than when I'm like, I was trading, as a retail trader just for myself, trade a couple 100,000 currency, and I'd be like, oh, cool, I made $1,500. That's a nice little gain, or, oh, I made, a couple grand here and lost a couple grand there. It's not a big deal. But now it's like the swings are bigger. And like I said, when I'm wrong, I'm wrong. And, when I'm wrong, I feel it a lot more. So anyway, I'm getting in the weeds here. Let's get back into the, charts. All right. So as far as the euro goes, we had a nice bounce today. And I still think that this trend line will come under assault at some point. Resistance though today probably 118.25. So I don't think we're going to get back up to 119 today, but I still think we are in a range. And remember, I am looking for dips in the euro to buy. I really think that a dip towards 116 to 115 is going to be a great buying opportunity. But it all depends on how aggressive of a sell-off we see in equities. Because if equities, like, let's say we go from 3,300 and we go to 3,000 and we take a 10% hit in the S&P, that could be enough that takes the euro down to 115 versus 116. So even though I think that we're going down into this neighborhood, down here, how aggressively we get down here and how quickly we get down here, it depends on other things, not just not just me trying to figure out where those targets are. It depends on what's happening in equities, what's happening in gold. And by the way, gold's nearing some support, but we're going to get into that in a second. All right, Bank of England decision kept rates unchanged. I'll let Stelios talk a little bit about that. But the cable actually slipped pretty hard. Now we have this resistance zone. If you use ForexAnalytix, you knew that we were coming into the resistance zone yesterday. So 30.50 is going to be, well, that's the top of it. But right now we are really struggling with 129.80. So that's going to be, if for some reason we make it all the way back up there, which I doubt we're going to do today, that's going to be resistance. I think the cable is vulnerable with all the Brexit headlines, but support in the cable intraday, I think the spike low, this hourly spike low down here, 128.20 is probably going to be pretty good support. Aussie. Aussie is actually holding up extremely well, but you'll notice we're in that very frustrating ascending channel. So I'm just going to mark up right here. It's easy, right? 73.50, 72.20. You guys have fun with it. 72.20, 73.50. You guys have fun trading it. And we are in a range. And I know you're probably thinking, well, aren't we in a bullish trend? We're really range bound. This. I mean, you can say that's a bullish trend, but it's a very frustrating one, because if you think about it, we're in a 150, 200 pip trading range and barely grinding higher. It's very annoying. So that's why I keep us in a range. And same with the Kiwi. So if you look at the Kiwi, similar type of situation. You guys can have fun with this one. Yeah, you might say, well, Blake, aren't you short the New Zealand yen? I am, but that's a different story because it's yen related and it's, multi-year trend line related. So, there's a difference why I'm trading that versus the New Zealand. But what I'd love more than anything is to see the Kiwi dollar really slip. But it's holding up well because, frankly, equities are still above 3,300. So, here's the channel resistance. Hold on really quick. Sorry, I'm reading comments that are coming into me while I'm trying to focus on analysis. Sorry, guys. Sorry to keep you all holding. New Zealand dollar. All right. Getting back to what I was thinking here. All right. Range bound. 6,600, 6,780. Resistance now at 67.60 would be lucky if we saw that. I'm going to put I think the downside should probably be more in focus right now, just because if I had to guess, we're trying to develop a top here. It's going to look something more like that. Hold on, let me fix this. So I'm more concerned with the resistance now, which is 67.60. Support is, I'm going to write down 66 cents. Okay. I know it's a while away, but like I said, with the Aussie and the Kiwi, I'm less focused on these. I'm more focused on the yen pairs. Dollar Canadian. Look at, one of the reasons why the dollar Canadian has slumped this morning is because crude oil has had a pretty aggressive bounce, but it's now stalling right where it should. So if you use ForexAnalytix, let me just show you what was written last night so you can kind of understand where I'm going with this. If you look at crude, go to basic technical analysis, look at last night's analysis. Crude is back at the 40 level as we near the resistance zone, right? That's that blue line there, blue area. Resistance zone at the 41 level, which may get tested overnight. So you got crude, which is right here. We're spiking up and we're spiking into that resistance zone. But what happened here is we hit highs and then we did a false breakout, right? So we did a false breakout and we're reversing. So we're getting towards the tail end of this rally from this triangle. And so now you have the dollar Canadian that is finding support. And in this case, look at the triangle support. Broke out of the triangle yesterday. Last night we made it all the way to 32.50 almost. We dipped right back to retest that trend line. Now that comes in at 131.80. That is key support today. So I'm going to tell you right now, that is key support for today. And resistance is at 132.60. And that is key. And by the way, this is an inverted head and shoulder pattern, which was my chart of the day yesterday, which will threaten to go bullish if we break through 132.60 or 133, which you guys can see right here. 130. This is the inverted head and shoulder pattern. And if it's going to break, we're going to break within the next couple of days, guys. This is to stay symmetrical. We might break out by the end of the week. So be careful if you're on the short side of the dollar Canadian. Dollar Mexican peso bouncing from the 127% extension. Once again, we're just going to mark up today's lows, which is 20.92. Resistance is going to be the 200-day moving average and this previous support, just as you guys should know this already for those of you that listen here every day. 2150. While we're below 2150, we have to stay bearish. But I was talking to a friend of mine in Chicago. Actually, he just moved to North Carolina. Anyway, he trades for a fund. And I was talking to him yesterday, and he's like, he's been short the dollar max since 22 for about 2 weeks. He pulled the plug on his short yesterday. So when we were below 21, he's like, yeah, I think that's enough. And with the market feeling a little risk off, there is looks like we got housing starts. Sorry. How'd the data look, guys?
Sorry, that's my bad. I should have told you.
You're sleeping at the wheel, and you don't even have your kids home anymore.
Jobless claims,
which is crazy. So what are you doing? Sleeping? Like literally, are you sleeping?
I know. Sorry, you got me there. Jobless claims came in line. So, and building permits also within a reasonable deviation. So nothing.
Yeah, it's I look at the housing market and just so you know, for those of you that don't know, I live in probably one of the hotter real estate markets in the United States, and that's in Arizona. And it's been really hot as of late, even with COVID, which is crazy to me. It's crazy. First of all, we had record-setting heat this year. Like we had over 50 days of 110 degrees or hotter. And I grew up here ever since I was like 4 years old. It was by far one of the nastiest summers. However, inventory is at historic lows here, and people are moving here from all over the place, and I just don't get it because we're going to run out of water. And with climate change, we're really going to run out of water. So it's like this. But people want to move out of the bigger cities like Los Angeles and San Francisco, and they think that they're like, well, it's nice there 7 months out of the year. And I'm like, but we're going to run out of water. Anyway, I look at places like...
So they're moving from one big city to another.
Yeah,
Phoenix
exactly.
is a big city now.
They're making it into a bigger city here, which is horrible. But anyway, our prices are much more tolerable. But Coach, the thing is that I realize why our housing market's going up, but I look at, like, I just refinanced my house because my rate's at 2.5%. It's like, so I understand why housing's doing well.
Yeah, like everything else, cheap money.
Yeah, it's super cheap money, but at some point, you're starting to see the housing data. It's not looking so hot because there is high unemployment, and I think people are there are more people under the age of 30 living with their parents than has ever before in history.
I wish mine were still alive.
Yeah, so you could live with them.
Yeah.
Yeah, I wish I could.
Mom,
I wish I could go move in with my parents. I'd love to go move in with my parents right now. Like, please.
When you have,
take my mortgage.
Let me know when they have 60-year-old people.
Yeah,
they
got better food in their fridge than I do, because they always do. Parents always have better food in their refrigerator than. Hey, I'm sorry, I got to continue on with analysis, but thanks for the housing data, Stelios. Next time, don't fall asleep at the wheel. All right, let me go into the U.S. dollar, and we got Grega coming in, so I'm just going to do this really quick. You guys already know these numbers: 90, 50, 92. It is bearish while we're below 92, but we continue to hold support, so just keep that in mind. Dollar yen. This is the one thing that I'm a little nervous about, the dollar yen at current levels. We just hit the 88% retracement, or you can see it right here at 104.50. So that's going to be support today. I think any rally back to 105.25 is a selling opportunity. We are bearish as we're out of the triangle, as you guys know. So any rally back here is going to be an opportunity to sell. But the one thing I'm a little nervous about, if you look intraday, we're getting a little oversold. We're bouncing a little bit here. So the risks are that that we get a little bit of an opportunity to sell it, maybe closer to 105, right? Or maybe 105.25. I think that's going to be a better opportunity in the dollar yen than where we're currently at. But you notice how relative strength is divergent intraday. So that's the thing I'm worried about with the dollar yen at current levels. All right. Dollar index. Dollar index is probing the multi-month trend line. Shoot, where is it? See? Doot, doot. We broke. And now you guys know to move above this previous support here, right? Here, it's really above 94 in a 94.50, but really right now it's 94, 93.90. So I'm going to be a little bit more granular with that analysis. I've been writing 94, but now that we're getting there, this is, so in my opinion, we're in a range environment, but look at the base that's being built in the dollar index. And so if we get above 93.90, then, the spike back up towards 95.50 seems more realistic. And that's something that we can, it's going to look, in my opinion, it'll look something like this, then we can sell into, right? So we have to be really careful as we're approaching. Well, I guess it is 94, huh? But we'll just keep it at that. We are above this broken trend line that now comes in at 93.10. So that's going to be support, or let's just write it at 93 today. US dollar, Norwegian krona, the resistance is 9.20, right? That's going to be important. Just as this is going to be an important resistance. We are in a range with the US dollar, Norwegian krona. However, what we've done is we've moved out of this triangle. So now support is 9.05. Greg is chomping at the bit to talk, so I'm not going to take that away from him. I'm just going to finish up gold. Where is gold? Dang it. Where is it? Did I just miss it? I did. Okay. So gold, notice this trend line here. If you use ForexAnalytix, you already got this analysis, guys. If I sound redundant, it's probably for like a lot of the new viewers that are coming in through investing.com that need to really focus on this. 1935 and then below 1905. So I'm writing down two numbers here. 1905, which is hugely important. What did I say? 1935, 35. And then we're struggling on moves up towards 1975. So, and we're in a range. I know a lot of you think that we're bullish. I actually think we're more of in a range environment, and we will turn bearish on a move below 1905 if that happens. We got to get bullish if we're back above 2000. Okay, so there's your bias chart, but really what I wanted to talk about, for those of you that do not know, this is the Trader Summit. I'm going to put this link in our it's in our chat box, so you guys can see it. If you guys haven't signed up for the Trader Summit, I know Dale already talked about it. We're going to run out of seats soon because we see the numbers, and when we run out of seats, you guys are just going to have to listen to the recording. But look at all the speakers that we have, and I mean, I was talking to Chris Weston from Pepperstone the other night. I was talking to Chris before I did his event. He's like, "This is the best lineup I've ever seen on any panel, event ever." He's just like, "I'm so excited to be part of this." I'm like, we're happy to have you. But what's going to be really cool is this debate right here. And then you got Abigail Doolittle from Bloomberg. She's going to be, debating these and hosting these four guys. So it's really cool. It's an event you don't want to miss. It's free to you. I ask you for this, a favor. Please go to, well, that's us right there. But our sponsors, please visit our sponsors. Just, go to their website, check it out, click on the links, check out what they do, please. It helps us out because they are the ones that are making this event happen. And without them, we can't make it happen. So, you guys get signed up. All right. Here's your bias chart. I'm going to pass it over to Steve, Stelios, Dale, and
Grega.
Him
The
too.
wizard.
That guy. All right, Grega, welcome, buddy.
Hey, man.
Hey, I'm
What's up?
gonna shut up now. So I don't even. No one wants to hear from me. So you guys have a great one. I'll let you take
Good
over.
luck today, Blake.
Thanks, guys.
Can I go back to sleep? Thank you.
Apparently, go back to the couch. Get back.
How's the knee, wizard?
It's getting better.
See you later, Blake.
Did it affect your wave counts at all?
Grega, grab the screen, mate.
Yeah, sure. Just have to do a lot of exercises and so on, but I will be fine, So.
Yeah, you're a young stud. You'll be
Too much
back.
exercise, you might find yourself with a third child.
No, trust me, I won't have a child.
Isn't that your dream, Steve? Isn't that your dream?
I don't even have a second one yet.
That's what I mean.
We had a plan to have 3 kids, but as soon as you have the second one, you will quickly change your mind. Trust me.
Yeah, I agree with that. I second that.
Yeah.
I'm stopping at 2.
You've already stopped that too, actually. Celio.
What about the milkman?
We haven't asked him, actually, Dale.
When he visits your house.
Yes,
I'm
of
just,
course.
oh, okay, all right.
The fun part is that joke comes from so many decades ago that the vast majority of people don't even get it anymore, because there's
There are no
milkman.
milkmen.
Yeah, there
What's
are
a
no milkmen. And now, I'm going to have the libertarian free market economist wake up in me and tell you the milkmen have been priced out of the market because of minimum wage.
Yeah, they have been. Yeah.
Okay, so Grega, what do you have for us? Give us the big picture.
Big picture of what? Of cable?
No, big picture in general.
Well, I still think that we are going to see more weakness in this risk off. As you know, last week we discussed about that flat correction for a wave B, and I think that this one maybe was finished yesterday, and I would not be surprised to see more weakness from here. So dollar is going to strengthen a little bit, but generally speaking, dollar trend is clear to the downside, and I think that these current corrections that we are seeing are maybe just going to take a little bit longer to unfold.
Since we've now been, unfortunately, in a market since the post-COVID response, that unfortunately everything begins from what risk assets are doing and then affects everything else like FX, etc. Why don't we start from stock indices and then we go to the dollar, since we know that it's inversely correlated?
Yes. So actually, I'm still bullish here, tracking a wave 5 that can, in my opinion, extend to much higher prices. So what I'm looking at on the lower time frame is just currently observing the setback, and the question is how deep this current corrective retracement will be. And I'm still a fan of this not calling the top. I will rather stay with the trend because it's just much easier thing to track on if the market is bullish, that you just observe the bullish wave counts.
True.
So either we are here in wave 2 of a higher degree and we will retrace all the way back to these early summer levels, and then
This is what, around 3,000?
Yes, around 3,000 also. I think it's a very nice psychological level, and at the same time would be quite healthy pullback. But as long we are trading, let me check this well. As long we are trading above this invalidation level, 31.67, it's still possible that we are actually here in wave 4 of this wave 3 that can be still
Of an extended wave 3, huh?
Yes, but as I said earlier, I think that this flat correction has been finished and that we could see more weakness. So even if this is wave 4 as part of ongoing uptrend, I think that this, as I have it here on the right, I think that these September lows can be retested. So looking for deeper prices into wave 4, even if this is just this minor correction. So for now, I think that this market is in a corrective phase, and as I said earlier, it's only the question where this pullback may finish or stabilize a little bit. If we go from
to summarize, your main case scenario is that it's more probably wave 2, so you're expecting a more short-term weakness in stocks before we continue higher.
Yes, I would say that we are expecting short-term weakness now, just focusing on this wave C drop. Now, if that would be part of a wave 4 or wave 2, I think it's a little bit too soon to say. But what I know is that stocks, whenever we see a very strong fall, we have seen several times in the past that they can be very quickly reversed back to the bullish phase. And I think that we should be prepared something on this as well here, whenever we get this weakness. But for now, as I said, these September lows, I think, could be taken out, and that's the timing when US dollar could also recover a little bit more. Also, we can look at emerging markets. It's been a while since I look at this one, but it can be a very nice guide to the overall view. And I'm sure that you will agree with me that we have a very big triangle.
Yeah,
here.
quite a huge consolidation pattern.
Yes, very huge consolidation. And this goes, if you just look at the cycles, you will see that actually goes very nicely with the S&P 500. And if we are now here in a wave D, okay, then we will maybe approach this upper trend line. But even this wave D should be made, as you know yourself, by 3 waves. Okay, so you are now in wave A, you will see a wave B, and then more upside. So this pullback could maybe be something similar to what we may see on the S&P 500 if we see that wave 2 setback, meaning a little bit lower prices.
Of course, the eventual implication is for a break higher in this triangle.
Yes, but in the cycle, in the long-term cycle, but this can still be, who knows, few years away. But overall view, I think that this is a very strong bullish pattern. Whenever this bullish breakout occurs, of course, you will still see reversal, huge one maybe to the downside, and that's when we should be aware and maybe even look for some opportunities whenever we get another shock.
Okay.
Okay.
Nice.
So,
what about, since we discussed the general outlook of risk, which is short-term probably bearish, but longer-term there is absolutely no reason to fade the bullish trend. What about the dollar? That would imply a short-term rebound in the dollar and the continuation lower?
Actually, here on US dollar, what I'm looking at is, even if you ignore this AB and that would be a wave C, just honestly, I do not like this kind of a labeling because I'm somehow forcing the wave count, because wave C will not be such an extended, and usually, but not always the case. So I also am open-minded, and I know that this can be a wave 3. But even if I say that this can be wave C, I will still be expecting more weakness, because this whole price action here, as you can see yourself, it's a very slow, choppy, overlapping.
Yes, it is.
It clearly looks corrective and compare this current square to the previous strong drop. So in my opinion, I think that we just have to be aware that more weakness could potentially be.
And since you drew it like this, as I've been saying for weeks, as long as we stay below 94, there is no technical reason to be bullish.
Yeah, exactly. But what I would love to see is actually a retest of this 94. As you know, if this was a former wave 4, then that's the level where the current higher degree wave 4 will typically find the resistance level.
Well, it got pretty close, Grega, last night, I believe. Weren't we 93.80 or so?
Yes, we were. But I'm still looking at, as I said, stocks came quite aggressively down. And if there is a little bit more of downside, then I think that these levels can still be retested. So short-term swings maybe not so clear to catch, but here on the big picture, I think it's very clear actually.
Okay, because you have on the chart on the right-hand side, it looks like you have a 94.66, we could get up there, whatever that red thing is above it. What's that? That's your alternate count.
Yes, exactly. That's my alternate count that we bottomed for wave 5 and that we would kind of rally here then in 3 waves.
Okay. But that wouldn't change your daily if we did that.
Yes, it would, but
it would
still prove to be a corrective rise. Since
okay, so they both be corrections.
Yes, exactly.
What is the Grega? What is your main case scenario as the longer term view of the dollar now, with what we've seen so far unfold from the high to where we are?
Look, if we look at the euro dollar, okay, I will still say that we could be here in this wave B position, and meaning that the whole cycle down from 2008 is maybe will be ongoing. But I'm not sure if this will be because of the dollar or because of some euro issues, because we know that euro and dollar index has a very close negative correlation because
very close
because of the euro.
Yeah,
right?
Since the DXY is
so
majorly consistent
whenever
of the
we
euro.
talk about the US dollar in general, maybe we should not be linked to US dollar index that much. You know, because of
no, I agree. That's why there are more indices, and unfortunately the DXY is the more recognized because it's the oldest one. But you know, they've made other dollar indices that are more balanced, you know, with euro not being that dominant like the US dollar index.
Something like equal weighted.
Not exactly equal weighted, but still it's not that the euro is like 60% of it, you know what I mean?
Yeah, sure. So even if we are here in a wave B, maybe we'll get this 3 wave rise within wave B, and then we see a weakness. Okay, so I still think that here longer term decline, in my opinion, is not confirmed as finished just yet.
So you would still be expecting perhaps eventually for the euro dollar to go below parity?
Towards parity, yes, to retest, or at least to retest those 2015 16 lows.
Okay.
Okay, so we can also look at cable.
Let's look at the cable, because lately, due to all the developments now, we're coming closer to the Brexit resolution. We have a lot of volatility.
Yeah, exactly. And maybe if there will be some kind of negative interest rates, I think that this is also waiting to euro or to cable bearish case. And from an Elliott wave perspective, we clearly see only 3 wave rise here. Even if I would be labeling here a bullish structure, and I would say that this was, let me just show you. If this was maybe wave 1, 2, and you're in a higher degree wave 3, then this current wave 4, current setback, should not cross this level right there. It was an overlap, meaning that this recovery is not impulsive. Okay, so I think that this tells us a lot where cable could be headed next. I think that we also have here this impulsive reversal. And whenever we look at this current rises, I think that bulls are always struggling here. And I would not be surprised to see this as a corrective setback finished maybe next week. And then I will be looking for another drop. We came close to this 38.2%. We haven't retested it. So also this former wave 4 is slightly higher, also not been tested. There you have also this swing low here back from August when we were in uptrend. So maybe this zone is coming once more in play, and then I would be looking for a continuation to the downside here on cable, at least for a wave C drop. So from an Elliott wave perspective, I think that this one
what would the implied target be in such a case? I'm assuming that more or less we would be looking for the cable to come close to 120 again.
I would be looking for first move towards this wave 2 support here back from July 14, 1.25 level, around there.
Okay.
But on your daily, you have Y all the way down at 112, right?
Yes, exactly. Looking in the context of this longer term uptrend. I mean, look where cable actually reversed. You have here this high. This was back in 2007, then 2014, and now again 2020. And at the same time, we also reversed.
Do you think we can come back to this? Do you think we can come back to the spike low there, or you think that's actually probably like a long-term low?
I think based on what I see on a daily, you know, it's, if I just, let's say that this would be a 4-hour structure, I would probably say that we are going here back below 1.14 level.
Okay.
So if we consider that Elliott wave is fractal,
it is, yeah.
Yeah. So, but I know it's a very tough call. That's why I always try to focus on minimum expectations, and that's why I said earlier, wave C towards 1.25, and then let's see what kind of a price action we get into this zone. Do we have an increase in momentum or volume to support the idea that we are actually falling impulsively in wave 3 rather than wave C? So it's
Greg, I'm pretty sure that a lot of people want to know the answer to the following question. Recent consolidations in metals. Is it a consolidation before another leg lower, or is it like the the bigger picture is that it's just a consolidation after this strong move higher, and we're just going to break to the upside and continue?
As you know, consolidations sometimes can be very tricky.
They can.
Yes, and the reason is because there can make different forms of consolidation. And whenever you have a triangle, well, that's the hard part, because we know the triangle can occur in wave B, and you will get this wave C drop that will confuse everyone who are not following the same pattern when prices drops here and makes another lower low here before reverses higher. The whole price action
can be a triangle.
Will be a triangle, yes.
In which case we should break directly higher.
Exactly.
So your intuition says which of the two? I
prefer to see a wave C.
Okay.
Because I've been noticing that a lot of traders, investors are again trying to call this breakout. Have seen several times this, especially on silver, but whenever it just takes too long to happen, well, it's probably something else. And I'm sure that there will be a lot of change in flows if we see a retest of these August levels. And that would probably confuse a lot of traders. I'm also sure that there are a lot of, or plenty of stops below these levels, because everyone after this very strong drop tried to buy a dip. And if there are a lot of stop orders, then you know that whenever those are triggered, actually the opposite might happen, and I would not be surprised actually to see a reversal away from it. Also, another thing from an Elliott wave perspective, which is very important, is that this first drop was very, very sharp. Okay, so it looks like it's acting like an impulse. So in such cases, it fits better to be a wave A as part of an ongoing deeper free wave drop rather than part of the whole triangle.
Okay, so let's assume your main case scenario, that it's A down, B the whole triangle, so there is one more leg missing to the downside, with which I agree, it is a very plausible scenario. What would the implied downside target be in the case of gold?
I would be looking for 1800 to be a support.
Yeah, I agree with you. 1800 to 1820 is a zone I like very much.
Yes, and also I have here this chart I posted on Twitter as well. It's a daily chart you have here. I think it's a what? It's a 100 moving average. And you can see that each time when we tested it, market made a very nice move to the upside. Now this move has been very extended, and definitely this rise from March was very extended, and definitely a new pullback, I mean, it's needed and it's healthy. And maybe we'll see another sharp correction similar to the one that we have seen here back before these March lows were triggered. So if I compare this distance, then you will came out exactly at this 100 moving average around 1800, which goes perfectly with this Elliott wave setup as well.
Yeah, makes sense to me.
Like it.
So
nice, Greg.
Thank you.
Okay. I'm assuming, Dale, that we've run out of time, right?
It is the top of the hour.
Okay. So why don't you just fetch your guest to make sure that he's here?
Yeah.
Ah, okay. Okay. Thank you very
Yes.
much, Grega.
Greg,
for bringing
nice.
Thank you, guys.
Nice, bro, and Godspeed and healing that,
And get
that
better.
leg. Yeah.
Sure, I will. No problem.
You promise?
Yeah.
All right, man. Okay.
He does. He's resilient. Trust me.
All right. And thank you, Steve.
Thank you, Dave.
Howard, I'm going to get you set up now to be a panelist. Looking forward to talking to you, meeting you. Welcome to Face, Howard.
Hey, how's it going?
Good.
Thanks for having me.
Very nice to meet you. Thanks for taking time out of the post-Fed day to be with us. Have you ever used Zoom before, buddy?
I have used it as a viewer. As a panelist, not so much. So
Okay.
it might be a little rough.
All right. So there's a green box that says Share Screen,
Okay.
and you just click that and choose the monitor you want to use, and then we'll be able to see your screen.
Okay.
See it?
Yep, I got it. Let's see. I'll just need to go full screen here. I've got to grant access. 1 minute. It looks like it's going to need me to quit and reopen. Is that a problem?
I'm not sure. Steve, are you with me? Usually, did you click the green box where it says share?
I did it. It wanted me to. I had to go in my system preferences and enable access to show my screen.
Okay. So click new share.
Let's try this. Let's see here. You got me?
Just audio.
Yeah. Let me. I had to restart Zoom. It looks like this. Let me clean up my configuration here.
Okay. It's all right. It's live TV.
Let's see.
There you go.
Okay. Let me just go full screen.
There you go, Mr. Megaphone.
The
All right.
famous microphone.
So Howard, I'm assuming that your last name, that you're related to Bobby Axelrod on Billions.
That's exactly right. Yeah, we're brothers.
So you guys were shorting airlines when the towers were coming down. Have you gotten over your guilt complex from that? Being a billionaire
I
hedge
sleep
fund
very
guy.
well now. I sleep
Do you?
very well.
Okay.
Yeah. Now I
all
just
right.
need those airlines to bounce back up. I'd be happy, man.
It's almost like we had a different type of 9/11 here in the country the last 6 months. So worse. So I'd like to ask you how you got started in the biz, and are you a self-taught trader? Did you have any kind of mentors? What were you doing before you started trading, or have you been doing it a long time?
Well, my first stock purchase was probably 10 to 15 years ago. I think it was Riverbed Technologies. Jim Cramer was recommended it, and of course, it pretty much went to zero or close to it. And
Booyah!
I've been exactly. I've been fooling around with stocks for a long time, but my journey has been a little meandering. I was in the Army from 2006 2010. And while I was deployed to Afghanistan, I spent a lot of time, building online businesses and preparing for my journey when I got out. And when I got out of the Army, I came back. I moved to Florida, and basically, I started a bunch of businesses. I started a software company. I started a brewery, among other things. And in that time, I played around with stocks. I dabbled. I invested 401k, IRA type of thing, but it was when I really interacted. This is probably close to just 4 years ago. My buddy Merrick Z, who just moved to Washington, he got me back into sort of looking at, the platforms had changed because everything in the past, you couldn't invest in a computer, you had to go through a broker or whatever. And so once the platforms changed, that's really when I got into technical trading, and I sort of spent, I spent years sort of building my own system. And it was really in December, the December crash of 18, when I really learned some hard lessons there and really sort of had to build some indicators to make sure that didn't happen to me again. So I am self-taught. Most of my work is obviously I lean on other people's work, and I try to give credit where it's due, but I like to sort of, everybody's trading style is different. And so I've sort of built my own style, and I do my best to share that with others.
Who would you say was a pretty big influence on you?
Specifically, besides my buddy Merrick teaching me, little lessons, about, don't try to be smarter than the market, and in those things. But I don't really have a specific technical trader. There's a bunch, Ian over at the Chart Life on Twitter is somebody I really enjoy from the bullish perspective. And obviously there's the bears who you see, Sven and some other guys with the megaphones that you see in my picture here, who taught me what the downside can look like. But, I'd like to say it's all a blend.
Okay. So do you compare it, without it being lethal, to having been in the Army, and thank you for your service, that you really have to be a warrior? I told people, if you hear this in your head before you do a trade, I hope this one works, that you need to shut your platform down. Don't you really need to have kind of an aggressive attitude where you say, I've done my work, I know why I'm getting in, I know where I'm wrong, and I know what I'm looking for. Prove me wrong, Mr. Market. More of a warrior mentality than, wishing and hoping that your next trade works.
100%. And before me, you guys were talking about the dollar and consolidations and things like that. And, I'm invested in precious metals right now. Silver is a big trade of mine. And so, you have to have a thesis. And it's easy. They try to find ways to shake you out of your position. So really, when I was new and I would enter a position that I thought would work, and then I'd get shaken out, then obviously, as others have had happen, the minute you capitulate is the minute it bounces or goes the other direction. And so it really is, you have to have a conviction in your position. And even when nobody else believes you, or it might be a contrarian position. And especially being on Twitter these days, where if you post it publicly, you're going to hear 1,000 different people tell you why you're wrong. So I like to use that as a metric for, where my trade stands amongst the crowd, but also how well informed am I compared to others that might have a better or different thesis. And so, I would say, especially, last night was some crazy market action, right? And so there's a lot of anxiety right now for a lot of traders. And so I understand.
Yeah. I love about this megaphone, you showed the old megaphone, okay? Before we had the blow off into the end of last year, we had what you call a throwover on your less sharp degree megaphone line. And then once back inside that megaphone is when the COVID crash happened. And so that established a new high up there that we recently tagged. Are you looking for similar action in this megaphone? We even had a little tiny throwover. It was only a week or so ago, and we're back inside the formation. Tell us what you're seeing here. And, could we have another big blow off like we had before on the old megaphone before it really tops? What do you think?
Yeah, see, so there's a gap here. And obviously I'm in SPX, but there's a similar gap in other indexes. But for me, what I've always believed all along is, Well, to be honest, first, I never expected I thought this would hit, but the velocity in which it hit surprised even me. And what I've always expected was that we would tag the top of this and somehow set up what would look like an alternate, a repeat of February. And I figured up here, they're going to set a bull trap. They're going to bring it down here and trap all the bears, which I still believe that they're trying to do as we fill in this range. And if you look, we're in a fresh range. And so I think a lot of people get so excited about the down moves, but they don't realize that this is a range we've never really established before. So, at 33.93 or so was our high prior. And so it's normal for us to struggle here. So what I believe and what I still believe, despite the overnight move, and of course today's action could convince me otherwise, is that we're going to go back up and tag this again in the somewhere 3,600 range. And then I think inevitably we're going to have to tag the bottom of the top of this channel and back test that. So
how do you come up with that internal channel? Because you know what people ask me, Howard, I draw a lot of lines. I don't care. You could always erase them, remove them. And they say, Dale, how do you draw your lines? And, I think you do the same thing. And I go, I draw them with my imagination. So, how did you come up with that internal channel? That's interesting to me.
Yeah, that channel I started drawing it back, in 18 as we were going through these phases, these cycles, and obviously this broke down. A lot of times what I'll do is I'll just start finding points. I like line graphs quite a bit, and I'll switch and I'll see how does the line graph change, because that takes a lot of the emotion out, because you're not looking at the colors of the candles or the wicks. And I think candlestick analysis is great, but I think a lot of times it fools people, especially when they look at a hammer, an inverted hammer, and they get obsessed with these candlesticks. And I think a lot of times they're a setup. So, I'll look and you can sort of see here, I'm like, this trend is obviously, several years long. And so, I'll draw lines, and like you said, with your imagination, I'll clone a line and I'll say, if I clone it and I move it up, does it do something? And so I could clone this line, and I'm gonna look for a pattern that may or may not work, right? And so if you just start to play around a little bit, I've got an artist mentality in many ways. And so that, I think, when you spend all your time on a chart, you just start to see things. And that's sort of how that developed for me.
Okay. So are you mainly a stock trader and stock index trader? Or is that your wheelhouse?
Yes.
Well, you said your precious metals positions too. So you are trading other things.
Basically, I've gotten to the point to where all I did was trade futures. I trade ES, or I'll play around with the NAS a little bit. But to me, trading futures is a pure form of the art that I really enjoy. But it's also, if you have a futures position, and it can be a sizable position, it's, as some of my other buddies know, it can be tough to sleep at night. And so I wanted to find a way, especially as I try to spend more time with my family. What can I do where I don't have to look at my phone? I can let the positions manage themselves. And so I've really gotten back into swing trading with equities. And I do have a belief that the dollar is going to go lower, and I've got some charts here we can go over, but, and so I've got some precious metals positions, but they're testing my faith on those. I think Jay Powell yesterday was not convincing, and I think the market is a little skittish as a result. So we'll see where that goes. One of the reasons I have this megaphone is I can zoom out to a monthly. I think people get so obsessed with the megaphone, up close, that they forget to look at prior years.
Forget about the previous 40-year bull market from '82.
Exactly. And, once you zoom out, you realize that these corrections are large, but they're not nearly as large in the grand scheme of things. And so I try to, and this is a log scale chart. So that's something I think a lot of traders don't use, is log scale. They just get obsessed with the parabolic rises and declines, and, they don't spend time zoomed out. And so it was important for me to show, and this is sort of my thesis, is that, these megaphones are sort of getting smaller and smaller. Maybe we're running out of steam, but there's still plenty of possibility where we can gain,
Yeah, I see you're using some fib extensions. Are you a believer before this bull market is over that we're going to see 47, 45? I see that number up there.
Yeah, and that's an example of where, where I think we can go based on, just based on these graphs. But it doesn't mean there's not going to be pain ahead. I mean, what I anticipated was that we were going to break out and see a 20% decline at some point, and we'll see how long this decline goes. I think it feels nastier than it really is, but I do believe that 4,000 is probable.
Okay. I have a question from one of our attendees. Hi guys, I've been attending these summary sessions and trying to start technical trading. Our story is inspiring. Can you summarize how do you jump start trading from the beginning level in your late 30s? I'll answer this. It's you're not too late, and then I'll let Howard answer it. You could do this when you're 90 years old. So you don't have to go out. We don't have to go out, Howard, with a jackhammer and shovel anymore, right?
That's right. Yeah, I think for me, everybody has a style. I don't know about you, but for me, it's just you have to become obsessed with it. It's not something where there's real money at stake. So unless you're trading paper, which I recommend a lot of people do when they start, because you really need to learn what price feels like to move. And then when you start, you got to have a little bit of skin in the game, not a lot. I've made the mistake of, blowing up accounts like others have, and it's not fun. And sure. if you don't have enough, if you don't have a source of funds to restart, you're done. And so for me, it's real money. And I think a lot of people take this a little too cavalier, but I'm obsessed with it. I even posted yesterday that, I'm obsessed with it. And so being obsessed helps me learn, and I make mistakes, but every day I'm trying to get better instead of just gambling with lotto plays.
I kind of tell people, they don't take demos seriously, buddy, but trade micro lots in currencies where at least you can't be damaged unless you do huge numbers of contracts, but at least you get a feel. Even if you have $50 on the line, you still have a little bit of that emotional and psychological attachment to the money to get used to it before you go, say, for example, to standard size contracts. Do you teach people, Howard? I mean, when people found out you were coming, you got a lot of Twitter buzz. I'm curious, you also have another site, has something to do with cake.
That's right.
I wouldn't mind, having a slice with my coffee right now. So are you mentoring people? Are you sharing signals? What are you doing on that other site?
Right. So Cake Trades, it's at cake_trades on Twitter. The website will be caketrades.com. I'm still toying around with that. And so for me, my number one goal is to make enough money trading to support my family and support my business through this COVID crisis. And so I am a natural, I've been a basketball coach for many years. I haven't been coaching the past year because of a lot of the teams have been shut down, but I'm a natural coach and I love coaching. And so I've been trying to find a way to do that without sort of creating, I don't want to insult what others do, but there's a lot of stuff out there that I don't think is beneficial. I think people cycle in and out of it and they end up losing money. And so I'm trying to find a way to be a coach and mentor people whose lives I can actually change. In fact, I've been toying with this concept in my head, of some sort of like a local training center for people who, maybe have some money to invest. They want to get out of their job and they want to make some money on the side, that sort of thing. And so, I've got family who ask me questions. And so my challenge is that, at Cake Trades, we don't charge anything at the moment. We're probably going to start offering a signal service, but I want to make it different. And long-term, I'd really like to find a pupil or two that I could teach, because I feel like if I can teach somebody everything I know, they can teach, if I can teach two, they can teach two. And then we have an army of people who know what they're doing. So that's sort of my goal long-term. I just don't want to rush into anything. I didn't want to build a job where every morning I have to wake up and write a newsletter, or I owe 5 trades a week, that sort of thing. So I'm still working through that. So right now I just share everything I know for free on Twitter and take all the heat that goes with it.
Okay. And why you holding yourself out to the public with a pseudonym?
Because having a local business and, obviously having a family, I like, especially because I'm a little brash and I'm a little, I talk a lot of game. I want to keep that separate. It's not, it gives me the freedom to sort of operate as my true self without having to worry about retribution.
What's your address again?
I'm in Florida, I'll tell you that much.
Okay, I understand. It could be pretty rough out there. It's really a tough house on FinTwit. So I could understand that. So getting back to the markets, do you think it's going to take, and with the action that we're seeing here, a relief deal? Powell keeps talking about the Fed can't do it all. In Jackson Hole, he said it. He said it yesterday. And then all of a sudden, there's talk of some type of interim deal that may come out of the Republican Party. Do you think the market might just keep selling off until we get another COVID relief package out of Congress?
I think that is sort of obviously that's the backdrop for everything. And, that's the backdrop. That's what the dollar needs to go lower. That's what precious metals need to go higher. I think that's what it's obviously a lot hinges on that politically. But I also think we have a bit of a currency war going on with Europe. And I think that it probably has more of an impact than anything. And I think stimulus would obviously facilitate some changes there. So to answer your question, I would say, yes, we need that, but I don't know if that's what the market's waiting on so much. I think the market is needing a little bit more certainty from a lot of, there's just so many unknowns with the election, with COVID, with currency wars going on. So I think right now, to be honest, this is just sort of a blow off top. I mean, Russell closed green yesterday and a lot of names rallied in the end. So I think a lot of it's just crowded trades are getting blown up, and the day traders of the world are getting stuck with their bags, and I think a lot of this has to do with trying to slow down the call buying. And also we have to remember that once SoftBank, once that story came out, you have to believe that somebody leaked it on purpose or for some reason, right? There's something going on there, but that bid has gone away because nobody wants to step in front of this downward momentum, right? So the bid isn't there, and I think that's caused a lot of the failure to bounce, which creates a psychological impact. And I think we're just waiting on somebody to say, hey, the market's bottomed, and bring some confidence back. And I think that's whatever that comes, maybe it's stimulus, maybe it's something else. I think that's what's needed.
What would change your mind about your bearish view in the dollar closing back above the channel, the broken trend line?
Right. I think that, and to be honest, if the Fed, Jay Powell was incompetent yesterday. I watched his interview and I watched him take questions, and it was really bad. And I just can't tell if he's feeling like he doesn't have any, he says he has more tools, but let's talk about those tools. He hasn't done anything to, he's not raising QE. Treasury issuance is something that I'm really concerned about. So I would say that if the Fed continues to act at a pause, like zero rates isn't enough. So if this is where the Fed's going to stay, I think that is bullish for the dollar. And I think I'm almost starting to think that Powell is okay with that. I'm starting to not really believe what he has to say. And so I think I'm not far from changing my view. Even though I believe that the world is printing, people are accumulating precious metals. I think there's a lot of supply and some weird things happening with the precious metal space. But in general, I would not be surprised if the dollar, if this was an underthrow and the dollar broke out big.
Okay.
Here.
Yeah, maybe what we need to do is blow through those tops, have some type of, that's not a popular forecast, because of a lot of emerging market countries have their, the bull argument is debt denominated in dollars, shortage of dollars. And I really think the dollar is a linchpin to everything else spins around it. So you get the direction of the dollar right, you could get a lot of other things right. Like I think the market needs a weak dollar, and that the dollar eventually will be the sacrificial lamb because it's kind of an invisible recession / depression if we just debase and things just cost more instead of having financial financial issues, you know, crises, and a weaker dollar would solve that. And I don't think a lot of people would even notice it, because we've done that before, where you could have nominal gains and everything. If he wants inflation, and that's what he talked about in Jackson Hole, isn't the easiest way to accomplish it would be to debase and weaken the US dollar?
Right, and that's what you think he's hinting at, except he doesn't, you know, even yesterday I asked him about inflation, and he didn't really have any answer for it. So, you know, the worst thing that can happen, I think, is if we end up with inflation without any sort of stimulus, you know, and growth stalls. And
Stagflation? Like
yes,
the 70s?
exactly.
Yeah.
Exactly. And I think we're at risk for that unless, you know, politically, we'll see what happens with the stimulus. And I'm not even convinced that the stimulus, I mean, I have a business, and the stimulus, it helped us pay payroll for a couple of months, but it wasn't much more than that. So, but at least it's something. And I think it's hope more than anything that people need. I think right now there's so much bad news that they need, you know, the market needs a leader, so to speak. So I do think, you know, long term, the Fed has been printing. They just, you know, they ramped up the printer. They're not stopping anytime soon. Rates are low. I mean, I don't see how you could say that we're not going to blow an even bigger bubble. But the challenge is, where is it going to manifest, and how quickly does it manifest? And that's what, you know, that's what we in the market are waiting on.
Yeah, hope is good. You know, I believe it's the oxygen in our life, and it's also the carbon dioxide in our trading. So you got to have hope, but don't use it as a trading plan.
Absolutely. That's the worst trading plan. You know, I always say, if you find yourself, and I always make fun of bears for this reason, because now they're clinging to the dollar, and, you know, they're always trying to find ways to justify a bearish thesis. And I think obviously price action right now is not great, but if you find yourself waking up every day looking for reasons outside of the technicals or the fundamentals of your own trade to justify a losing trade, then that's the wrong place to be.
Okay, so you say, you know, you're involved in the precious metals. Do you have a roadmap chart on silver, perhaps, to show us?
Yeah. So,
okay.
Yeah, I've got, you know, and to be honest, I'm not stoked with the overnight action in silver. I'm not, you know, it's been having a hard time holding on to its gains. It seems to me, you know, my thesis for the past week has been, well, I'm sorry, the past month has been accumulation, and that they're just building a position before it takes off. And I always sort of use this wick-off accumulation pattern as an example. However, the dollar continuing to gain strength, you know, does give me pause. But if you sort of look at where we're at, you know, this is 2008 to sort of 2011 here, and we're in a similar spot, right? Where it came up in this case, it tagged and ramped above 30, and then sort of retested this 2650 area. We got close, and so I still feel like we're sort of in this zone. What a lot of people point to us coming down here and retesting maybe 25. To me, that might change my thesis a bit, because I feel like this is the support level that we need to stay at. You can see it, you know, it's a clear trend. So if we lose that, I might readjust the roadmap. For now, I still believe that we're sort of consolidating here, and that we should, once whoever needs to build a position gets it, or they cover their shorts, or whatever they need to do to clear the road ahead, we're going to sort of take off. And I believe, you know, long term, there's no, we sort of got a massive cup and handle here. There's no reason silver can't push towards 100 if it wants to, if the inflation targets are accurate, and, you know, all that. But in between, it's been so volatile lately, and it's hard to say where it's going to go short term. I just have to stick to my guns long term.
Okay, Howard, what's the best way for, unless you have something else to show, you know, now would be a good time to tell people that are interested in following your work, learning more about you and what you do and what your plans are, to work with other people. What's the best way for people to get in touch with you?
I would say the first step is just follow me on Twitter. It's at Axelroark, AXELROARK. And in there, you can see my bio, and you'll be able to see where Cake Trades is. And I've got a t-shirt company that we've been trying to launch called FinTwit Swag.
Oh yeah, I saw them. I want one.
Oh, there's the market. Yeah. So basically, I'm saying if you like what I do, go buy a T-shirt, and that helps me enough. And other than that, you can email me howard@axelwork.com.
Howard, pleasure meeting you. And you know what happens after you do an interview with me?
What's that?
You're now my trading warrior, brother.
Well, I like that. I'm in.
Okay, you all right with that?
I'm all right with that.
All right, buddy. Well,
Works
I
together.
hope you and your family remain untouched from this COVID. And I wish you and everyone you work with a lot of success in the markets. I appreciate you coming in and sharing your story with us on Face today.
I appreciate you having me. Thanks for the time.
All right, Howard.
Best
Good
luck to y'all.
hunting. All right, everyone, that's a
I
wrap.
getcha.
All right, catch you later. That's a wrap, everyone. Remember, don't just count your pips, count your blessings, and we'll see everyone to wrap up the week tomorrow. Adios. You're very welcome, everyone.